In my December 8th update, I warned that a major low was forming for February 2026. Since then, Bitcoin has crossed below its cycle line, making our downside target of $73,408 more relevant than ever. Is this a local bottom or the start of a much deeper decline? Today, we use the Hurst Cycle principles to look at the 18-month, 40-week, and shorter-term cycles to see exactly where the trend is headed. Let's dive in. We start with the big picture, the 18-month cycle. Some may wonder if the low we saw on November 21st at $80,537 was the start of the next cycle. I believe this is very unlikely for two reasons. First, that would make the current cycle only 15 months long, and in a corrective phase, cycles usually run a bit longer. Second, we haven't seen the sharp rebound above the 20-week cycle line that typically follows an 18-month low. Our target of $73,408 remains valid, with an ideal time window between the last week of January and the first week of February. This target sits below the VTL, or valid trend line. If Bitcoin reaches this and rebounds sharply back above the VTL and the FLD, it's a very bullish sign that the low is in. However, if we fail to cross back up and the decline continues, the October high of $126,272 might actually be the 54-month cycle peak, which would signal a much deeper drop toward the red 54-month cycle line. Moving to the 40-week cycle, the ideal time for a low is right now, the third week of January. The actual 40-week cycle is the second and last one of the 18-month cycle. Since the first 40-week cycle was only 35-week long, to maintain the Hurst nominal average of 38.9 weeks, this cycle should ideally bottom around January 26th. This lines up perfectly with our 18-month target of $73,408. If we see another 18% decline this week, it would confirm that the $126,272 high was indeed at least the 18-month peak, perhaps the peak of longer cycle. We will look for a crossing above the blue 40-week cycle line to officially confirm this low has formed. The 20-week cycle is our short-term confirmation tool. Since this is the fourth and final 20-week cycle within the larger 18-month wave, its low will likely mark the bottom for the whole move. We expect this low in the final week of January. Once Bitcoin crosses back above this cycle line, we can start looking toward an upside target for the next peak, likely around the first week of April. Also, when the bottom is confirmed by the Hurst principle of synchronicity, with confidence we will label this low as the 18-month low. On the 80-day cycle, on January 15th, we saw a clear upside signal at $91,356 when the Bitcoin crossed above his cycle line, suggesting a target of $102,175. However, Bitcoin is currently hugging the cycle line. If price crosses back below this line before hitting that upside target, it's a bearish warning. This would likely trigger a sharp decline into the January 31st window to meet our $73,408 target. Finally, the 40-day cycle. Our last January 3rd $89,714 signal was a success, hitting $97,939, within 1% of a $98,891 target. That gives us a 100% success rate so far for the first signal of the year. The next 40-day low is expected on January 26th. This convergence of the 40-day, 80-day, and 40-week cycles on the same week suggests we are entering a period of maximum cyclic pressure. That wraps up today's look at the Bitcoin cycles. We are approaching a high-probability window for a significant low. Whether we hit the $73,408 target or find support sooner, the reaction at the cycle line will be our guide. If you found this Hurst analysis helpful, please hit the like button and subscribe to Trading Market Cycles for the next update. Good luck with your trades, and I'll see you in the next video.